All right, here we are with the third financial statement, which is the balance sheet. Now, arguably, this could be the most important one because this tells you the position of the company. But let's get into it. A balance sheet is a financial statement that reports a listing of the amounts of assets, liabilities, and equity at a specific point in time. So the last two that we did was as of December 31st. It tells us what we've done over the course of the year. This one, the balance sheet, tells me what are my balances as of right now, as of December 31st. So you can kind of think of it as your bank statement. It tells you what your cash balance is right now. That's kind of what a balance sheet is, but on a grander scale. This follows the accounting equation. This is the high holy equation of accounting. If you're an accounting major, this is what your life is going to be ruled by. Because if it doesn't follow this equation, it's not accounting. It will always be wrong. And the accounting equation is very simple. It is assets equals liability plus equity. Or assets equals claims. Liability plus equity, another way of saying that is claims. So what we have versus what we owe or what we've made. That's what this is really dealing with. Now, let's look at an example of a balance sheet. This is what you would see. Again, we've broken it down to its three categories: assets, liabilities, and equity. Again, we've itemized everything. So under cash, we have under assets, we have cash. We have what's called accounts receivables, inventory, supplies, land, equipment. This can get pretty lengthy, but these are just, like I said, an example. Total those out, that's going to give me a total asset. Again, we pushed that out to the right. We did a little bit to show that this is a subtotal. If you notice under total assets, it is a double line. It's not the bottom number, but it's still double line. That's because, again, we're not doing anything else to that number. We're not adding anything else to that number because that's all we care about, total assets. Now, we'll compare it later on, but we're not adding anything else to it. Then we have our liabilities, and we list all those out. And again, we do total liabilities and push that out to the right. And then we have equity. For the most intro classes, introduction to financial accounting, you're probably only going to deal with two equity accounts. There are going to be more of them, but for the most part, you're probably going to deal with two, and they're going to be common stock and retained earnings. Common stock is what's being invested. Retained earnings, and more specifically, this is our ending retained earnings. This is what we just found on the statement of retained earnings. Will go under equity. Find out the total equity, push that out to the right, and then if you notice, I have one last line item. It is the total liability and equity. And if I total up liabilities and equity, that's going to give me my total claims, which is going to be $535,000. And if I compare that to my total assets, I know right away that I have matched the accounting principle or accounting equation, which is total assets equals total liability. It is a great check figure. If they're right, then you're on the right track if they match. If they don't match, you know 100% you're off somewhere. And you'll get really, really excited when you actually start doing these and they match. So that's your balance sheet.